I'm Yahoo Finance Executive Editor Brian Sozzi, and you're taking a look at a live shot of the opening bells on Wall Street on this summer Friday morning. Insurance play Accelerant ringing the bell at the NYSE to celebrate its IPO, one that has valued the company at more than $6.2 billion. The cast of the musical Joy, one I haven't seen, getting things popping over at the NASDAQ. Lots going on, real busy week here. It has been an attention-grabbing week, I should say, for investors. Tesla had a far from electric quarter, while investors didn't have to search too hard for impressive numbers out of Alphabet. And naturally, we had a fresh dose of Trump and Powell drama, with this playing out on live TV on a Federal Reserve construction site. Now attention will shift to what stands to be a bigger week for markets next week. We'll get earnings out of tech heavyweights Apple, Meta, Microsoft, and Amazon, and Jerome Powell will be front and center with a decision on interest rates, one that probably won't do much to appease the hard hat wearing president. So lots on the docket and so little time to dig into it all. But now Opening Bid is all about serving up investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions with all that money in your portfolio. Let's get down to the NASDAQ now. That is where we find Brooke DePalma scanning the markets. Brooke, what's on your radar screen?
Good morning, Brian. Certainly, stocks taking a bit of a pause here as we hit those record highs Thursday after market close. The S&P 500 roughly flat this morning. NASDAQ also flat, and the Dow also flat as well as we make way to the market open here. Taking a closer look, I do want to quickly look at that NASDAQ. When you take a look at the month to date, what we've seen so far is this rally among those tech stocks has really driven the NASDAQ higher. But if we take a look at three stocks I'm watching this morning, when it comes to specific sneaker, apparel, retail giants, I want to take a look at Puma. That's one stock that's in the red this morning after the company noted that it expects to post an operating profit loss in 2025. The CEO there citing an ongoing volatile geopolitical and macro and economic volatility. Now, it's important to note here that CEO at Puma just stepped into that role on July 1st and has a background of really turning companies around. I believe that he was previously at Adidas, and so certainly worked with these staples names and hopes to bring back that same magic to Puma. He said that 2025 will be a year of reset and 2026 will be a year of transition, but certainly that stock under pressure as you look over the past year, certainly taking a toll on the company as it really looks to make way in this turnaround. I also want to take a look at Decker Brands, a bit of a different story there. There was so much optimism as the company really did outperform in their international market. They saw international net sales up nearly 50%, and that really offset the tariff uncertainty that we saw here in the U.S. really play out. We saw a 2.8% decline in domestic sales, but Hoka and UGG outperformed expectations yet again. That's a story we've been hearing over the past few years. And I want to take a quick switch to look at retailers in play here. If you go all the way to the bottom right of this YF Interactive board, I want to take a look at Dick's Sporting Goods. That company getting a bit of bump in the open, but if you take a look year to date, this company under pressure, down more than 6%. And why we're seeing the pressure, or rather the lift this morning, is that Dick's reaffirming that they're still going to have that merger with Foot Locker, but the company did say, Foot Locker, in a filing, that they're withdrawing and refiling their pre-merger negotiations, but investors certainly optimistic as they make way to really confirm this merger. And just taking a step back, taking a look at how we're opening this morning, I do want to hit on two headlines that we're getting this morning from President Trump. He said we'll have most deals done by August 1st. Of course, tariffs negotiations have been underway for quite some time. He also said that they're nearing a trade deal with China.
All right, thanks so much, Brooke. Appreciate it. We're kicking things off with your daily guide to the biggest market drivers of the trading day. Here's what I'm watching. Number one, hard hat duel. President Trump and Fed Chair Jerome Powell verbally joust on a construction site a few days before the Fed's meeting on interest rates. It was an extraordinary bit of theater for market goers.
You just added in a third building is what that is. That's a third building.
Well, yeah, but it's a building that's being built.
No, it was built 5 years ago. We finished more than 5 years ago.
It's part of the overall work.
It's not new.
Can't make this stuff up. All right, number two, what's inside is ugly. Intel has the top trending ticker page on Yahoo Finance as its stock gets pounded following earnings. The The company hit all the wrong buttons for those yearning for an Intel turnaround. New CEO Lip Buten sounded more like a cost-cutter-in-chief than a steward of innovation on the earnings call. And Intel once again lost money as it slips further behind NVIDIA and AMD on AI chips. Number 3, gearing up for the tech earnings avalanche. Meta, Apple, Microsoft, and Amazon all report earnings next week. Investors are wondering if they will see another strong Alphabet-like quarter from these names, or is there disappointment lurking? Best be no disappointment, given the sky-high valuations the Mag 7 stocks trade on right now. Let's fire up my roundtable for today. CFRA Research Chief Investment Strategist Sam Stovall and Yahoo Finance Senior Reporters Brooke DePalma and Inez Ferre. Sam, I'm going to go over to you because you've been at this game for a while. Have you ever seen that type of exchange between a Fed chair and a sitting president? Just extraordinary stuff. And then what's the read through to markets, if there's any?
Well, no, I have never seen that kind of an exchange before. So it certainly does make for interesting headlines. I'm not necessarily sure it's going to be affecting bottom lines because I think Fed Chair Powell is going to stick with the timetable that is based upon the data. So when they meet next week, I think the outcome is likely to be that that they are happy with the trajectory of inflation, that the economy remains resilient along with employment trends, that the trade agreements are coming through, but they're not going to be cutting rates until they feel that they need to. And we think that'll probably happen first in September and then again sometime in the fourth quarter.
Sam, I mean, the Fed chair got embarrassed again, now in a very public exchange. Do you think, I mean, he's still human, of course, but do you think this digs him in even more? I mean, how could he come out next week and cut rates, but then how could he also even signal that rate cuts may happen next year or even at the end of this year?
Well, I think, like I said, he's basically trying to block out outside interference and focus on the data. So we don't think that they're going to be cutting rates next week, but we would not be surprised if there were a bit more dovish statements, acknowledgement of the two members who are encouraging a rate cut to take place at the July meeting. But we feel that the focus will be on the data because Powell's term does end in the first half of 2026. And as a result, I think he would like to go out looking good rather than simply responding to what others are requesting.
Inez, I never thought I would see a Fed chair wearing a hard hat. I go back to when I first started, it was Alan Greenspan. I know for damn sure he would never be putting on a hard hat. But I think one thing to watch next week is in the Fed meeting is who dissents against Powell.
For sure. And look, can we say just awkward? Because it was an awkward scene. It was to the point almost ridiculous, comical when you were watching them together there with those two hard hats, because you could tell that Powell did not want to be there. He would have been anywhere else but next to Trump in that scene. But look, I think that this underscores two things. One of them, this highlights that the government is desperate. I mean, Trump is desperate for these interest rates to come down. Interest expenses are sky high, and he wants those rates lower. The other one is, I think that there is a perception that Fed independence is eroding before our very own eyes because there seems to be a shadow Fed emerging here. And this is signaling to the markets that the next person that is sitting in that in Jerome Powell's seat will do what Trump wants him to do or will do what the government wants him to do. And it puts that person in an awkward situation. So whether or not even Powell sits out the rest of the term, which he's expected to, that is almost irrelevant because it's almost like you're watching this erosion of Federal Reserve independence.
Well said, Inez. Brooke, you were running through the results out of Deckers. UGGs, I believe, up double-digit sales. Hoka, up double-digit sales. I mean, this is not, if the economy was falling apart and in badly need of a rate cut, I don't think you get these results out of a brand or a company. I mean, we really don't need a lot more of what they sell. How many more pairs of UGGs do we need in our closet?
How many more pairs of Uggs? I mean, I certainly, I could have tons. I love wearing them. But when you really hear this story, it's an ongoing environment of what we've seen over this past quarter really play out. The consumer needs to be convinced to buy. Now, keep in mind, here in the U.S., we did see a same-store sales decline of 2.8%. And they're really alluding that to this ongoing volatile environment. And this is largely what we've seen play out over the course of this past earnings week. We've heard from Chipotle cite an ongoing volatile consumer environment that led to their second consecutive quarter of sales decline. And so it's really this lean into this idea that certain companies are winning in this environment and certain companies are not performing as well because they're not really catering to the company. Chipotle even saying that they lost their value proposition. On the other hand, Decker saying that overseas they saw their international sales rise. And so certainly they're able to lend themselves to this consumer that is willing to spend up if they're convinced to.
Full disclosure to this roundtable, because it's Friday, I bought a pair of Ugg slippers for myself because I saw Tom Brady hawking them a couple years ago. I just stopped wearing them. I look like a total fool. I will not ask you to comment on that, Sam. I won't do that to you, but I will ask you your thoughts on tech more broadly. Intel, disastrous quarter, terrible earnings call. Didn't like how that went at all. It sounded like the CEO is more concerned about cutting costs than driving real innovation. Where else could you find, if Intel is not going to be that value play in tech, where else could you find value in this space?
Well, our belief is that you still have good growth opportunities in areas like Marvell Technologies, other semiconductor stocks, NVIDIA, et cetera. Even though now the question is value, relative value, because we are looking at valuations that are certainly above the market, but you're not talking about valuations that are reminiscent of 2000. So I would basically say that the Intel story, you're absolutely right. Revenue was flat, a little better than expectations, but that does not really tell the overall story. We remain lukewarm on Intel, given the server share loss as well as the increasing competition in the PC area.
Sam, you're being kind with lukewarm. I'm going to say I'm just frigid cold. I did not like how that earnings call went. One name that has not been frigid cold, Inez, that's Meta. This stock has had a big run up this year. They're seemingly, this is a company immune to tariffs. Zuckerberg has sucked up to the president. That seems to have quieted down that relationship. Bottom line, they have to deliver big next week when they report.
Yeah,
Sure.
completely. They have to deliver big, and Wall Street is going to be paying attention to whether the AI trade is really paying off for companies like Meta. We saw that it is paying off for companies like Google with its cloud unit, with its search. So this is the theme that now is sort of coming to the surface, which is, okay, you're investing so much in AI. Where's the payoff? Where are you seeing the results?
Sam, last word to you. Apple will also report. This is a company, of course, one of those really iconic companies caught in the middle of a trade war. As you're going through an earnings report like this at a conference call, what's the biggest thing you're looking for?
Well, I think you're looking for expenditures toward the AI space because they have been pretty much behind the curve in that area, but also looking to see what kind of a change could be seen in the iPhone sales, the new models, et cetera. So I believe that Apple right now is really in sort of a catch-up mode with other companies, and so we want to hear what they're doing to try to get ahead of the curve.
All right, we'll leave it there for right now. Straight ahead, the death of wrestling icon Hulk Hogan on Thursday has stunned many across the world. I'll dig into the WWE business he left behind in our Stock of the Day segment coming up. Welcome back to Opening Bid. I'm locked in on a bullish call out of JP Morgan analyst Samik Chatterjee on Apple ahead of its July 31st earnings release. Chatterjee says the setup for Apple shares in the near term is, quote, better than imagined. He thinks Apple's quarter benefited from robust consumer demand and less than expected supply chain chaos. While I appreciate the optimism, let's not forget Apple has lost the AI narrative and investors are paying the price. The stock is down 15% year to date, the second worst performer from the Mag 7 this year, behind Tesla's 24% drop. Let's turn now to our stock of the day, and this one hits close to home. Wrestling has lost its Babe Ruth, and the country has lost a sports icon. Hulk Hogan died from cardiac arrest on Thursday at the age of 71. Hogan is being remembered for putting wrestling on the global mainstream stage in the 1980s with its fiery promos, overflowing charisma, and bulging physique. Simply put, before today's mainstream stars like John Cena, The Rock, and Roman Reigns, there was the Hulkster, brother. Whatever I say here, it won't be anywhere close to enough in explaining what Hogan meant to many. That would include this 80s kid who used to watch Hogan's matches late on Saturday night with his dad. But what the shocking news has done besides bringing up childhood memories is to remind everyone of the impressive WWE business Hogan helped build and has left behind. WWE merged with UFC in September 2023 to create the TKO group. Led by Power agent and CEO Ariel Emanuel, TKO has wasted no time in extracting value from WWE. WWE landed a lucrative 10-year, $5 billion deal to exclusively stream its flagship Raw show on Netflix. That deal began in January. Meanwhile, WWE's bread and butter live events business continues to hum as fresh storylines and stars cultivate the next generation of viewers. Couple that with TKO streamlining the WWE operations, you get the results achieved in the most recent quarter. WWE sales and operating profits rose 23% and 38% respectively. All areas of WWE's top line increased in the quarter. Still with me, my roundtable, CFRA Research Chief Investment Strategist Sam Stovall and Yahoo Finance senior reporters Brooke De Palma and Inez Ferre. Sam, really, this is someone that took a business mainstream the world over in a Hulk Hogan, but you drill down to a business like TKO, pretty good story inside of a media landscape that is absolutely crumbling. I see, of course, Comcast is splitting up. You have Paramount and Skydance. That deal just got approved, likely to close in a few weeks. Does the media landscape changing as fast as it is, does it interest you from a valuation perspective? Is this a sector now that maybe things have started to quiet down just a touch that you want to get involved in?
Well, when you look to media, that's part of the communication services sector, and that sector certainly is on fire, but is really pretty much dominated by Alphabet, by Meta, et cetera. If you look a little bit deeper into the movies and entertainment area, the first name that comes to mind is Disney, but then you have other companies, as you said, TKO, but also Live Entertainment. And this is a group that is expected to show very strong earnings growth. We're looking for almost 28% earnings growth for the second quarter, looking also for about 15.5% earnings growth this year and 23% growth next year. So the group is trading at a near 10% discount to its own absolute average PE ratio and at a more than 16% discount on a relative basis. So this is a category that we think does have some opportunities going forward.
Always love your stats, Sam. I mean, you always come armed and ready. And as what I was reminded of just doing this dose of research for TKO, how international this business has become, not only with the live events, but when you get put on a platform, when Raw gets put on a platform like Netflix, of course, Netflix is a global company, global streaming platform. I think it's just unlocked new opportunities for that WWE business and even a UFC, which is, of course, the other brand inside of TKO.
Oh, yeah, for sure. And look, I mean, sports, live events, that's been huge for all of streaming media in general. And that is what all these streaming giants have also been sort of leaning into. But I do want to mention that when you talk about Hulk Hogan, look, this has like been also he's been like a child hero, a hero to kids like you in the 80s, Sozzi. But I think it's interesting that he was like a bigger than life personality, a guy that was just a good guy, and the persona has been someone who, look, his signature phrase, say your prayers, take your vitamins, and believe in yourself.
Amen, Inez. Amen. I took my extra dose of vitamins this morning. And real quick, Brooke, before I want to get your comment on this, I want to give my colleague Ariel Helwani and the Yahoo Sports team a shout out. I mean, their coverage of this, literally since the news broke yesterday, is awesome. I encourage everyone to go to Yahoo Sports, read this coverage because they have a lot more of it this morning. But Brooke, I'm sure you remember watching matches with Hogan. And you know what? Decades later, those matches have added up to big business for TKO.
Certainly a big business indeed. And Sozzi, I may not be an 80s kid, but I certainly am a 90s kid. And hey, I grew up at Hulk Hogan too. And what we're really hearing here, according to a few notes that I'm reading out this morning, UBS really saying that there's lots of still hope around this business. TKO is up 18% when you look at their stock price year to date. That's outpacing Sphere Entertainment, up only 10%. And in addition to that, also other catalysts that they're really looking at is the potential for them to team up with ESPN, with not only Netflix, but also Amazon, Warner Brothers. They're also looking at new site fee and sponsor wins. And Guggenheim also saying in a note this morning that TKO is well positioned to benefit from an upcoming media rights renewal cycle. They went on to say that those combination synergies, demand for live sports, and that further sponsorship monetization is all what could lead to the stock moving higher. And so there's still lots of momentum. Of course, Hulk Hogan will always have that touch that he left behind on the company, but certainly investors really excited about where this could go. As Inez pointed out, that live events array has really gotten so much attention. Of course, we also heard from the Wall Street Journal saying that NBC could even be launching a new sports venture cable network. And so there's really just so much excitement right now. Think of all the run up, not only in wrestling with WWE and the UFC, but also in women's basketball. There's just this time, this momentum in this very moment.
Well said, Brooke. It's so hard for me not to bust into a Hogan-like promo right now, but I'm going to contain myself and keep it moving. It's time now for our question of the day. Are we in an epic stock market bubble? Sam, I'm going to punt this one over to you. My case when these questions come up by various folks is you don't know you're in a bubble until it explodes and your portfolio is cut in half.
Absolutely. Well, right now, the S&P 500 is trading on a forward PE basis more than 2 standard deviations above its 20-year mean. If you look to the 10-year mean, then it is above 1 standard deviation. And if you shorten that time frame to 5 years, we're in a fairly normal environment. So I guess it also depends on what you say is normal, because technology today is very different than it was 10 or 20 years ago. A little more encouraging, though, is that I don't see sector excesses from the standpoint of how far above their 200-day moving average they're trading. None is 1 standard deviation or more, so they're all within longer-term ranges. But short-term declines are always possible. On average, we have had a decline of 5% or more annually since World War II.
And as I think stock market bubble, I go back immediately to the dot-com craze. A lot of those companies, they didn't have any money. They didn't make any money because they had no sales, and they were just totally clueless. Even to go back to the cannabis bubble a few years ago, same deal. Those companies really had no operations. What we're seeing now, I would argue, are the likes of NVIDIA and AMD, like companies with real operations making real money, just going up to higher valuation levels. That doesn't make them a bubble.
They're betting on that AI trade. Look, are we in an asset bubble? Perhaps. Perhaps there will be pullbacks, of course, along the way. But we have to keep in mind that the dollar has been in a downward trend. That's stimulative. The U.S. is in this industrial push. XLI is at all-time highs. That's stimulative. You also have stocks at all-time highs. You've got meme stocks that are back in vogue. And you've got crypto that is also surging. So what this tells me is that investors are trying to put their money into assets because we're in a sort of debasement environment here, because they're seeing that the value of their money is eroding. So they continue to invest. And by the way, there's also companies that are investing in crypto as well. Wall Street says, be careful, because when we see this speculative frenzy going on, that could increase the risk for pullbacks.
Awesome insight, guys. Appreciate you. Have a wonderful week, and a big thank you to my contributors for today. All right, the trading day is well underway in financial markets, and every second matters. What you do today can determine your financial future. So here's one forward-looking indicator I want to leave you with. It's impossible to predict the bursting of a stock bubble. Anyone making these calls should be viewed very skeptically. Try to understand their why and then reaffirm your why as an investor. All right, coming up, Yahoo Finance's Market Catalyst. We bring you the news behind the market moves for the trading day. Don't go anywhere.